One asset class you are structurally constructive on the next 3 years.
That has to be equities, and it's not only 3 years but longer. 3 to 5 to 7 years. The equities are expected to give good returns, I think.
All right. Large caps or mid caps for compounding stability.
So while this will keep changing based on at what valuation these broader market segments are, but as of today, large caps are more favored over mid caps.
The biggest micro risk investors may be underpricing today.
Um, I think really from Indian macro perspective or Indian valuation perspective,
Hmm.
I see limited risks today. But yes, in terms of if you're only focused to some of the overvalued segments of the market,
Hmm.
then that is the risk that you're carrying in your portfolio.
Okay. One behavioral mistake that permanently impairs long-term wealth.
See, if you chase past returns and you want to invest in something which is going up, okay,
Mhm.
it works in the short term, okay, but that mindset permanently impairs your long-term wealth, and after certain losses, streak of losses, you will just go stay away from that particular asset class, including equities. Like if you just come into equities when you see market going up, and then you end up buying a overvalued market, and you lose capital there, and then you say that, okay, this is not for me, this is too speculative, but that's the problem, that your intent of why you came into the equities first fight was not clear. You were chasing returns, right? And that can happen with any other asset class, including gold and silver and crypto, right? So if you just look at, you don't want to upgrade yourself, learn to understand the fundamentals and why things work the way work,
Mhm.
then you will end up chasing the trends and you will impair your long-term wealth potential.
Absolutely. So, and the final question is one principle every serious investor should anchor in 2026.
Yes, so 26 and beyond, I think it's always that you understand, what you are buying.
Hmm.
Now, this might sound very generic, and then that's where the framework comes handy.
Hmm.
But if you understand what you are buying and what is the valuation, what is the equation, fundamental equation that you broadly understand,
Hmm.
you don't have to chase it day in day out closely, because or rather track it, because you can take the help of professionals on that front.
Hmm.
But broadly, if you understand those things, right? People, I mean, we have seen people with a lot of high IQ and who are doing brilliant in various fields. On investment side, they just kind of tend to outsource or don't look into this, or either just do the wrong thing.
Hmm.
Be very risk taker and do the wrong things at the wrong time. So I think it's imperative for everyone to understand the fundamentals of investing, and that's a very key allocation, key aspect of creating long-term generational wealth.